Hey guys, this is Alex Owari from ONG Tax and Accounting Services. So in this video, we're going to talk about the 9 common misconceptions or myths that foreign owners of U.S. LLCs have. And when I talk about common misconceptions, I'm talking about where the foreign owner think, LLC is treated in a certain way and where I think it's wrong and needs to be corrected. So misconception number 1 is when the foreign owner of the U.S. Single Member LLC thinks that the LLC pays dividend. Now, an LLC that has not elected to be a corporation does not pay dividend. In the U.S., we use Title 26, which is the Internal Revenue Code. And the Internal Revenue Code says that once you take money out of your single member LLC or your disregarded entity, that money is referred to as distribution or draw, and it's not dividend. It can only be dividend when you have an LLC that has elected to be a corporation or you're receiving funds or dividends from corporations. It's only corporations that pays dividend. LLCs that has not elected to be a corporation pays distributions or draw. Misconception number 2 is when the foreign owner thinks that the mere fact that they have set up an LLC automatically qualifies them for an ITIN, which is individual tax identification number. Now that's not true, because to be able to be approved for an individual tax identification number, you need to have a tax filing obligation, or you need to qualify for one of those exceptions. Okay, there are so many exceptions that the IRS provide. It's not one of those exceptions, and it does not qualify you automatically to get an ITIN. You need to attach a tax return, or you need to prove that there's an exception. One of the exceptions that relates to LLCs is when you are a member of a multiple member LLC or a partnership. For that process, you could use the partnership details to apply for the ITIN, and it's one of those exceptions that you could use. All right, misconception number 3 is when the foreign owner of the U.S. LLC thinks that because he now has an LLC, he needs to complete W-9. W-9 is for U.S. residents, U.S. citizens, permanent residents. It is not for non-resident aliens. So if you're a non-resident alien, you live in a foreign country and you have an LLC and someone is asking you to complete a W-9, this is your moment to educate the person that looking at all the perjury statements in the W-9, you cannot complete W-9. You have to complete W-8, because W-8 is used by foreigners to complete it. And because your LLC is disregarded, we actually look at you, the owner, who is completing the form and not the LLC. So anytime someone asks you as a foreign person who owns an LLC to complete a W-9, you need to step back a little bit and ask more questions, okay? And the proper form that you should be completing is W-8. Misconception number 4 is when the foreign owner has set up a U.S. LLC, single member LLC, and he thinks that because the LLC is set up in the U.S., he could apply for U.S. Residency Certification. Now, there's no residency issue here. The only thing you formed is a U.S. LLC, and you live in a foreign country. And so your LLC cannot be a resident of the U.S., okay? So if you are a foreign person and you own a U.S. single member LLC and you send in Form 8802 to get the 6166, which is a U.S. Residency Certification, it will be denied, because the IRS will look into the system and they will know that you probably have never even filed a tax return, or even if you file a tax return, you file a 1040 NR, which is for non-resident, and they will, right on the spot, they will know you're not a U.S. resident alien, you're not a U.S. citizen, you're not a permanent resident, and you have not made any special election to be treated as a U.S. resident. And so the application will be denied. So the point I'm trying to make is the fact that you have a U.S. single member LLC does not qualify you for a U.S. tax residency certificate. I know most of you would love it. You would love to get that to stop maybe claim treaty benefit from somewhere, but that's not how it works. Or you would love to get it to, stop VAT withholding or VAT tax payment, in other European countries or other countries that has that VAT system. But if you apply for those things here, you're not going to be approved, because you're a non-resident alien who owns a U.S. LLC cannot be approved for a U.S. residency certificate. All right, misconception number 5. That is when the U.S. LLC has financial interest or signatory authority in foreign bank accounts, okay? And where the amount in those foreign bank accounts at any point in the year exceed 10,000, okay? So if the amount is 10,000 or below, there's no need to report FBAR. But most of the time, foreign owners think that because the LLC is considered as disregarded and they are foreign persons, they don't think that they are subjected to FBAR reporting. Of course, you as a foreign person is not subject to FBAR reporting, but your LLC is, okay? For Title 31 purposes, which is the code that talks about money and banking, and within Title 31, there's a section 310 that deals with the Financial Crimes Enforcement Network, which is FINCEN. So FINCEN regulates who files FBAR. And under the FINCEN regulations, a U.S. LLC that's set up in any of the 50 states in the U.S. is considered as a U.S. person for FBAR purposes. So if you have an LLC and the LLC have bank account, which at any point in the year has an amount or balance in those bank accounts that exceed 10,000, then you have to file FINCEN 114, which is the FBAR reporting. Okay, so the LLC files it, not you as a foreign person. So that's definitely something that you need to take into consideration because there's a huge penalty for failure to file FBAR. So yes, your LLC need to file FBAR and it's real, okay? Title 26 deals with the Internal Revenue Code and the Tax Code. Yes, Title 26 talks about the fact that an LLC owned by one person is a disregarded entity. But Title 31, which is money and banking, and within that you will find the FINCEN regulation says that an LLC is a U.S. person for FBAR purposes. So we get it that Title 31 says something different and Title 26 says something different. But you need to figure out, which of the titles we're dealing with at any point in time. And all those titles are very important when dealing with the U.S. tax system. All right, misconception number 6 is when the foreign owner thinks that, he set up the LLC, but the LLC is not doing any activity. The LLC is basically not operating, it's dormant, and they think they are not required to file the proforma 1120 and 5472. And we all know that the failure to file those forms is a $25,000 penalty, which is pretty huge. And so when you think that you have a dormant LLC and you're not required to file, that's wrong. The proforma form 1120 and 5472 becomes necessary when the foreign owner makes, a related party transaction between himself and the LLC. And even though the LLC is dormant and it's not operating, there are certain things that the owner does or may do that would trigger the reporting. So for example, the states where you form your LLC requires that you renew it every year, especially some states. And I know most of you form it in Wyoming or Delaware. Those states requires that you file it every year and you renew it. And then you also have the registered agent fees, okay? So a lot of the time when you have a dormant LLC, it probably means sometimes there's no bank account for the LLC or the bank account does not have any money. And so the owner dips into his own pocket and pays all those expenses such as renewing the LLC or the franchise taxes and also paying the registered agent. Now, those payments that the owner is making on behalf of the LLC triggers reporting. It's a related party transaction in the sense that you're doing it for the LLC. So whenever you have those transactions and even though your LLC is dormant and it's not operating, right on the spot, you have those proforma 1120 and 5472 forms to report. And so be aware of those situations and report accordingly. All right, misconception number 7 is when the foreign owner thinks that they need an SSN, which is a social security number, to go get EIN. Nowadays, millions of foreigners are forming LLC, and so this myth or misconception doesn't affect everybody, but there are still some people that think that you need to have an SSN, a social security number, to apply for an EIN, and it's not correct. In the SS4 instructions, yes, we get it that the form asks for a social security number, but to most rules that we have here in the US, there are some exceptions. And one of the exceptions to filling out SS4 is when you're a foreign person, you're not required to provide an SSN, because we know you don't have it unless you've been here in the US and had some connections and be able to apply for one. But If you're a foreign person, we know you wouldn't have an SSN. So what you would do is you would fill everything out on SS4. You indicate that you're a non-resident alien in the place where it asks for SSN. And then also having an SSN becomes easy. For example, I can apply for EIN, and it would take me 10 minutes to generate the EIN from the IRS website. The problem is if you're a foreign person, you cannot do an online application, okay? So you need to complete your application and then mail everything into the IRS. There's also an option to fax it and then wait for maybe 2 or 3 weeks to get the approval. But definitely you do not need an SSN to apply for an EIN for your LLC. Misconception number 8. So we know that when a foreign person owns a U.S. Single Member LLC, one of the most important reporting is to file the proforma 1120 or 5472. Otherwise, there's a potential for a $25,000 penalty for failure to do that. But people are missing the point here, okay? For the specific purpose of this regulation that came into being, an LLC that's owned by a foreign person is considered as a reporting corporation, only for the specific purpose of filing proforma 1120 and 5472. Now, the proforma 1120 is just an information return. It is not meant to tax you. It is meant to gather information on the beneficial owner of the LLC, and also if there's any related party transactions such as contributions and distributions coming out from the LLC. So one of the things I get is people get confused because they think they need to complete Form 8832 to be able to file the proforma forms. Now, you don't have to do that, okay? If you have no intention of electing to be treated as a corporation, and the only reason why you're trying to file the 8832 is to file the proforma form, then let me save you some time here. You don't have to do that. Leave your LLC as it is and just file the proforma forms, because if you do the 8832 election, now you're going to be subjecting your LLC to corporate taxes, which is 21%, and then also you end up paying double taxes when you take dividends out of your LLC, because now it's seen as a full-blown corporation. So if filing proforma 1120 and 5472 is a reason why you think you need to complete 8832, please stop. Do not do it, because for the specific purpose of 1120 and 5472, the IRS sees your LLC that's currently existing right now as a reporting corporation for proforma 1120 and 5472. So an 8832 is not needed, okay? You only need 8832 to elect to be a corporation if you have an intention to do that, okay? If you have an intention to do that, and based on some advice that you've gotten, you want to elect your LLC to be treated as a corporation and then now start paying taxes on the corporate income, then that's fine. But if the only reason is proforma 1120 or 5472, then please stop, don't do it. Leave your LLC as it is and file the forms every year. All right, so we'll talk about the last one, which is misconception number 9, okay? An LLC will not help you to stop withholding, the 30% withholding from royalties or dividends or stuff like that. So FDAP income usually is subject to 30% withholding, unless there's a treaty that reduces it or basically exempts it, maybe if possible. So I see a lot of people forming LLCs, especially those that come from non-treaty countries, because the 30% is too much. They would like to form an LLC, and then they use the LLC to certify that the LLC is a US person, which basically stops the withholding, right? But you're doing it wrong, because as we've explained continuously, an LLC is a float owned by a single person. An LLC owned by a single person that has not elected to be a corporation continues to be a flow-through entity. And so we push the LLC aside, and then we look at who the owner is. And the owner is the one that pays the taxes and not the LLC. So forming an LLC to stop the withholding or to circumvent the process is not going to work. I mean, if you even form it and then you certify that you're a US person, and then they stop the 30% withholding or whatever withholding it is, they stop it, you have to file a tax return on 1040 now and pay those monies back, okay? Because when we look at the law, you're a foreign person, and what does the law says? If a foreign person is receiving U.S source passive income, such as royalties, dividend, they're usually subject to 30% withholding unless there's a treaty between your country and the U.S. that reduces that withholding rate or maybe exempted, so you need to look at the treaty too if you're a treaty country. But an LLC, if you're forming it for the specific purpose of stopping a withholding, I don't think it's the right way to do it. And you're better off staying on your own or the same way you were collecting an income before, okay? All right, so those are the 9 common misconceptions that we've talked about. I hope that this video helped you out. And also, if you have any questions, if you need help with your taxes, feel free to contact me anytime, okay? Use the link below and then schedule an appointment with me, okay? And then I hope to see you in the next series of videos. And like, share, subscribe, and have a great day. Bye.